Going forward, as I said, we're very much neutral. I'd almost refer to it as table pounding neutral, which means we want to respect oversold and respect overbought. Again, that means different things to different people, but what should be important and the same for everybody is the levels at which you consider those overbought and oversold conditions. And so that's what I'm doing here. So part of what we do is we have this systematic trend model that calculates trend definitions. Remember, I showed you an uptrend looks like this, a base of an uptrend looks like this, and then a downtrend looks like this, and a base of a downtrend looks like this. This is the S&P ETF. We know across the 4 time frames, and I'll explain that, this is the trend. This very long-term chart is the yearly chart. So we're talking very long-term, fundamentally driven trends. I very rarely, even in my research clients would know that I very rarely talk about this because it's so irrelevant often. But now that it's possible that the market's inflected negatively, this time frame now becomes very relevant, and I'll show you why. But still focusing on this is the time frame that we want to make sure we get right because this is the monthly chart. It's still in an up base, but it's in a base because it lost its momentum. It's no longer trending like this. It's lost its momentum. It's doing this. The way it loses its momentum is it closes or breaks below its momentum zone. And that momentum zone now becomes resistance. So what's the line in the sand between this up base becoming, going like this as a base and then going higher again versus going into a base and then going lower? It's this zone right here. And so you can see that the Spider ETF is there right now. It's sitting right in the middle of it. And so again, if you're a tactical investor, this is not where you get short. This is the worst place to get short. If you're a tactical investor and you want to get long, this is where you get long. If you're a long-term allocator and you just got $1 million in allocation, I would far rather put that money to work here than up here. What's this level? It's a combination of these 2 red zones. So this green box is a combination of these 2 zones. And this red box is a combination of these 2 zones. And the problem is for us as investors is that once you get up here, it's going to feel better to get long because you've gotten some relief and maybe you're thinking the whole thing is over. But the context is the market's lying. It's not as healthy as it looks. This, in my work, I would refer to as a broken market. And right now we're an oversold broken market. And all we're going to do is rally across the range and become an overbought broken market, which sets the stage for potentially ultimately this. And if that ends up being the case, that we end up resolving this like we have every other highly divergent extreme environment where the market actually finally cares about those extremes, the minimum downside would just simply be that you do a cyclical bear market. And typically in a cyclical bear market, you go to the momentum zone of that long-term yearly chart, which is down here. For me, if I'm a allocator and I'm getting assets through the door, I want to allocate only in this green box, definitely not up here. Tactical investors should be getting short up here. You can even start getting short now if you're really aggressive, but just keeping everything small. If we're below here, this zone, everybody should be ignoring oversold conditions. Remember, if we get below here, that's very likely going to coincide with the risk gauge going into risk off, which means oversold conditions no longer matter. So we're in this environment here where overbought conditions don't matter. The more overbought it is, the better. If you're in a downtrend, oversold conditions don't matter until you get to a level where it might matter, right? So that's how I would put this all together. If you're below 550, you're going to want to pay attention to that deterioration. Thank you for watching this clip from our recent webinar titled A Rare Moment in Stock Market History. If you want to stay up to date with what we're thinking and how we're navigating these uncertain times, start your free trial today at motorcmr.com or by clicking the link below.